Hello and thank you for joining us for today's MacDesk Flow Report. After a Hurricane Sandy imposed broadcasting hiatus, we are back from the floor of the New York Stock Exchange on the eve of November options expiration. And with the major indices down slightly, that's about 27 points in the Dow and just about 1.4 points in the S&P. Asia was mostly lower overnight with the notable exception of Japan's Nikkei, which rallied nearly 2% as the year fell to a half-year low against the US dollar. This came after some forceful comments from Japanese opposition leader Shinzo Abe. In a speech in Tokyo overnight, Abe, the leader of the Liberal Democratic Party, called for continued unlimited monetary easing by the BOJ, a return to zero or lower benchmark rates in order to target 3% inflation, and he urged the central bank not to wait until the end of the current BOJ governor's term in April in order to do this. European indices were mostly lower overnight as the region released a string of Q3 GDP numbers, with Eurozone GDP showing a sequential decline of 0.1%. This being the second straight quarterly decline in growth, it marks the official beginning of a Eurozone recession, which came as no surprise whatsoever to investors active in the pre-market futures. Retailers came under some focus in the pre-market following disappointing earnings out of the big box space, and weekly jobless claims rose by 78,000 new claims to 439,000 last week. But bear in mind that this latest weekly reading is skewed by the aftermath of Hurricane Sandy. So against this backdrop, the Philly Fed's General Economic Index reading for November delivered a particularly nasty negative surprise. After a decline of 0.6 in October, street consensus called for a flat to slightly higher read. Instead, it came in at negative 10.7, trailing even the lowest street estimates. The reading was particularly hampered by a second straight month of declines in new orders and a sixth month of declining shipments. Adding to this cornucopia of negative market catalysts as we head into the options expiration and the Thanksgiving week is a surge in Brent crude prices as rocket attacks between Israel and Hamas continue for a second straight day, marking that region's worst flare-up in 4 years. Again, a very troubling geopolitical situation, and the Brent crude premium over New York oil futures reflects very real fears of an escalation of violence. The VIX is up about 3% at 18.5. That's not a huge move, all told, as we're seeing a lot of the activity in ETF and index options today composed of traders closing positions in the November contract and not buying heavily into new ones. In fact, ticker GLD, that's the Spider Gold Trust, which often sees a pickup in demand for bullish options when traders turn risk-averse, actually saw its one-month implied volatility hit a 52-week low today, with the fund trading just below $166. What this speaks to is a negative demand for option premium on the part of traders, which seems a little incongruous with the global headlines. So we'll be watching all the activity through the expiration tomorrow, and we'll keep you posted through the midday. For now, we hope you're safe and sound after Superstorm Sandy, and we wish you a happy Thanksgiving holiday. We'll see you in 2 weeks for the next NYSE MacDesk Flow Report.